Welcome to the Fear and Greed Business News Afternoon Report for Wednesday, the 26th of July, 2023. I'm Sean Aylmer. Every afternoon, we've got the 5 stories that happened today that you need to know about. Quite the day. Story number 1, a lower than expected inflation reading sent the local share market up nearly 1% today to finish at over 7,400 points, a 5-month high. The consumer price index for the June quarter rose by 0.8%, according to the Bureau of Statistics, and for the 12 months to the end of June, 6%. The S&P ASX 200 jumped sharply after the 11:30am announcement. The big miners led the way, with BHP and Fortescue both up more than 2%. Tech stocks, consumer discretionary and financials did well, while utilities, healthcare and real estate investment trusts underperformed. Broadly, the stocks that do better when the economy is doing okay, they outperformed. The safer stocks, they underperformed. All the big banks did well, so too did WiseTech Global and REA. Among the laggards were Goodman Group, CSL and Telstra. Story number 2, there is plenty going on in the corporate world just ahead of reporting season kicking off in earnest next week. Mineral Resources says it has failed to hit guidance on lithium exports from its West Australian mine, owned in partnership with New York giant Albemarle. Kogan.com says its inventory has been slashed by nearly 60% compared to a year ago, but sales tumbled over 22% and profits fell in the June half due to inflationary pressures and higher rates. Online marketplace Freelancer has broken even for the June half after a 7% drop in net revenue. Founder and chief executive Matt Barry told investors that artificial intelligence is poised to transform the way millions of unskilled workers operate. Oil and gas group Beach Energy said production was up 12% last quarter, triggering a 1% jump in its share price. And Corporate Travel Management upped its earnings forecast. It's seeing particularly strong growth in Europe, while Asia remains on track to surpass 2019, the last pre-COVID year. Story number 3, shipbuilder Austal's share price fell 11% today after it said a big cost blowout associated with a US Navy contract could push the company into a loss. Austal said there had been cost increases around towing, salvage and rescue ships. It means the company, which had expected to make close to $60 million last financial year, may even end up in the red. Austal Chief Executive Paddy Gregg said it was clearly a disappointing financial result and blamed inflation and inaccurate assumptions. Austal's share price almost doubled in the 6 weeks to the middle of July on the back of the excitement around the AUKUS deal, but a chunk of that was lost today. The news comes just days after Austal management stood alongside the US and Australian Navy bosses and politicians to celebrate the commissioning of USS Canberra. Story number 4, gold digger Perseus has a tricky dilemma: how to spend more than $800 million in cash. The miner could pay a bonus shareholder dividend next month after beating full-year production targets and doubling its cash reserves for the 2023 financial year. The main reason for the extra cash is the decision to defer spending money on a new mine in war-torn Sudan, according to a report in the Financial Review. Perseus is the 4th largest gold miner on the ASX at the moment, and production at its 3 mines in Ghana and Côte d'Ivoire beat the company's forecasts. That all came as the price of gold rose. So it has plenty of money, $552 million in cash, but it doesn't want to put the bulk of that into Sudan right now. Boss Jeff Quartermain hasn't given up on Sudan yet. He said it could be a very different place in a few years' time. And story number 5, on Wall Street this morning, Microsoft reported record sales and profits and said it's starting to see the benefits of its investments in generative artificial intelligence. The company made $20 billion during the June quarter, or a little less than $30 billion Aussie, which isn't far off what the big 4 Aussie banks will make combined for the full year. And Alphabet, parent of Google, also reported and said ad revenue was up 3% compared to the previous June quarter. Google made about $18 billion for the quarter. Google's another big player in the AI market. It's tipped to invest billions of dollars in coming years to grow its market share. That's it for the afternoon report for Wednesday, the 26th of July, 2023. Michael Thompson and I will be back tomorrow morning with a Thursday edition of Fear and Greed Business News. I'm Sean Aylmer. Enjoy your evening.